Oh, it's time. Something that everyone looks forward to every single quarter. It's Tesla earnings. Now, whether you own the stock or not, it's one I'm sure you keep track of because there's a lot of important stuff going on with this one, okay? Tesla, obviously the leader in electric vehicles right now in the world. So it's one that we all track because this is really an industry of the future, very futuristic tech company. Tesla is, that is. So it's one we all track. And the stock itself, obviously, doing some gangbuster numbers over the last year, up over 360%. So this is obviously a stock that's seen its fair share of fortune, right? If you own this, if you've owned this one, you're pretty happy with the position, no doubt. Yeah. So let's kick into these earnings and see what we can dig up here. Let us see. So, a non-GAAP EPS on this company of 93 cents is a beat by 15 cents. So overall, from a non-GAAP perspective, looking pretty decent. And a GAAP EPS of 39 cents misses by 8 cents. So in terms of GAAP profitability, there's a slight miss. I don't think it's anything too crazy with the company. Obviously, it's huge that they're even making profit to begin with, and they started the profitability in a year in which they were faced with a very tough situation with 2020. So very impressive still that they're able to show profitability. So that's a positive for the company. In revenue, I'm actually really impressed with this line, 10.39 billion, up 73.5% year over year. It's a beat by 110 million. I'm quite impressed with this one. There's a lot of things that obviously go into this. We talk about the addition of China as a market, so that's going to help their overall comp sales, no doubt. In the future, when the Germany Gigafactory gets built, that'll be just an extra overall sales line that they didn't have before. So you have to take that into consideration with a company like Tesla as they work on global expansion. Automotive gross margin came in at 26.5 versus a 24.3 consensus, so nice to see there. And CapEx came in at 1.35 billion versus a 1.03 billion consensus. So that's why you see a little bit of a miss on the GAAP EPS perspective. It looks like expenses were up just a little bit there from that. Let's look at some finer details, okay? In Q1, it produced 180,000 vehicles and delivered 184,000 vehicles, which is doubling what they delivered the year prior. Now, those are very substantial numbers when you're talking about 180,000 vehicles. They only delivered 90,000 in the first quarter of last year. And again, as I mentioned, it was a weaker market for sure, as well as the addition of the China Gigafactory. So there's reasons for it, but overall, still impressive numbers. Seventh quarter in a row of profitability, which is good. That's good to see. And obviously regulatory credit revenue growth as well, as the government does pay them for every electrical vehicle sold. So, that's a positive. Electric vehicle. Operating margin was 5.7% of sales. The profit level was reached while incurring SBC expenses attributable to the 2018 CEO award of $299 million in Q1. Elon got $299 million of stock in quarter one. Of 2018, that is, which is obviously worth a whole lot more by now. Good grief. It's worth billions now. That is crazy. That is crazy stuff. The Model Y ramp in Shanghai is progressing well. We expect the Shanghai factory will continue to increase quarterly production output through the year. Recently improved domestic supply sourcing ratio to over 90%, so quality stuff. Obviously trying to source domestically. Very cool stuff. Gigafactory in Shanghai is increasing volume this year, as well as Berlin and Texas on track to start production and deliveries in this year as well. So we'll see what that looks like. Tesla semis are slated to begin in 2021 as well. So another vehicle for them that I think is going to be a pretty big one. Obviously, not many others providing big rigs that are electric. Not many other companies are offering that besides the scam company Nikola that does not actually have a physical model. It's all fake. But so it's going to be huge. That's a big market for them as companies try to prove really they are with the hip crowd and they're all about environmental protection. they're going to turn to electric semis. At least the big corporations will. Your Walmarts, Targets, the ones that get a lot of scrutiny from those worried about their emissions. So definitely huge for Tesla, no doubt. Some already in use for sure by these companies. That was a good neck crack there. Don't know if that picked it up, but if you didn't, oh my gosh, that felt good. Over a multi-year horizon to achieve 50% average annual growth in vehicle deliveries, which is massive, with some higher years, with some years being higher and some lower. Obviously, they're saying an average, which is why some will be higher and some will lower. Duh. I don't know. This editor has got some specialties. Look at delivery for the first quarter. No production of Model S or X's. Model 3s, though, is where the main story here is. Deliveries for the Model S did come in at 2,000, by the way. But what we care about here is the Model 3s and Model Ys. Very good stuff here. 182,000 vehicles delivered, 180 produced. So pretty nice to see that. And other than that, we'll look at a little bit of these slides, see if there's anything we find pertinent to ourselves. And if there is something pertinent, well, you know what? We'll find it. So, so a GAAP operating income came in at $594 million and $438 million of GAAP net income, which is quite impressive. I like to see that. I do like seeing that quite a bit. Model 3 was the best-selling premium sedan in the world, as per them. So good to see that. Automotive revenues, again, I like that they show a solid quarter-by-quarter breakdown. We're able to see automotive revenues consistently show some great growth. Obviously not quite where they were in Q4, but Q4 there's a lot more spending in general in the auto industry as a whole. You wouldn't think people give cars as gifts, but they actually do, and it slightly disturbs me. Who's got that much discretionary income? I don't know. I know I sure don't, and I'm guessing a lot of those people probably don't either. So that is why they finance. Financing. Nothing crazy there. Obviously, stuff we already saw. On production, again, you see quality numbers here as they're phasing out. Really zero production on the Model S, which is kind of crazy. But you see the Model 3 production increased over 100%, which is nice. And obviously Model 3 deliveries, Model S deliveries, I should say, down 83%. Not a shocker, they weren't producing them. While Model 3 deliveries coming in 140% up, pretty big. Total deliveries up 109%. It's good numbers. Those are good numbers. Supercharging stations, obviously, you see those up 41%. Solar deployed up 163%. So this is a company that's diverse, and they're doing some good stuff. Nothing super crazy here. They go over some brief overviews of what the company's doing. My next big thing would probably be, look at these pictures. Look at these pictures. That's the Gigafactory in Berlin. It's coming together. It's freaking coming together. There's no doubt about it. Look at the stamping press. You see the stamping press in the Berlin Gigafactory? I do. And the Texas Gigafactory, obviously, just in its infancy, but coming together quite well. Look at them. They're working hard. Look at that. Yeah, they're putting stuff together. There's no doubt. Obviously, look at these guys doing work in here. That's just a massive freaking factory. I don't know about you if you think so, but that's a massive factory. Here's the Tesla Semi prototype testing. My assumption, it's actually a pretty sleek looking model, but my assumption is they're not going to roll it down a hill without it being powered on and there not being even a battery in it, as per a Nikola standard. So just throwing that one out there. You see overall, in terms of vehicle deliveries, consistently growing there. Operating cash flow doing pretty decent. Obviously, Q1 was a little bit of a dip, but historically, Q1s are not that good of performing quarters. It is the first profitable Q1 in quite a while. And net income and adjusted EBITDA, both in good signs. trailing 12-month revenue by quarter. A really good chart. It's a really good chart. Operating cash flow, the same thing, and net income line. I mean, it's a very good looking chart as they move towards profitability, quite a bit of profitability. So here is the balance sheet. I like it because they show They show a full year comparison here as well, which I like a full year comparison. We're looking on the far right column, and I'm going to really compare it to the year over year. So the far left plus the far right. Total current assets coming in at $24 billion, $24.7 billion. Does compare to 14.8, really 14.9 of the year prior. Main bump is going to be a bump in cash and cash equivalents. Total assets in general at $53 billion compared to $37 billion the year prior. Most of it, again, due to that increase in current assets. From a liability standpoint, total current liabilities came in at $14.8 billion. That compared to $11.9 billion of the year prior. So overall, assets grew by quite a bit more. Total liabilities in general at 28.5 compared to 26.5 of the year prior. That's nice stuff. I like to see that, and I know you know what that means for me as well. Stockholder equity coming in at $23 billion on this company compared to $9 billion of just a year ago. That's fantastic. Those numbers are really good, and you see the company's growing profitability at a massive, massive rate, and that's showing in the balance sheet. It really is. It's a good-looking balance sheet for this company. Now, I do have concerns, I do have concerns with the company. You mentioned overall, they'll probably slated to make around $50 billion this year. This is a company trading at a market cap of $700 billion, which, all things considered, compared to this market, is not necessarily ridiculously expensive. The PE ratio still going to be sitting over 1,000 after this non-GAAP miss in profitability. So the valuation on this stock is quite expensive. I can't lie to you. I'm not too worried about the market cap necessarily, but the PE ratio pretty high. But I like what this company's doing. I think it's a company that probably has earned where it's valued at. I just personally don't think it's necessarily one that should be invested in at these high of levels. And there's a few reasons for that. I think obviously there's a lot coming for this company. But I do believe at some point competition is going to get more fierce in the industry. There's no doubt. And Tesla, it's got a great head start, but some people might return to their favorite brands if they start making electric, your Fords, your Chevys, and the like. In the next couple of years, these companies will be releasing fully electric models, and you need to consider what that looks like for Tesla. So I'm not saying only one winner will exist, but Tesla will get toned down a little bit when the other companies are actually providing that electric option. So keep an eye out. Hope you have a great day.